Hi guys and welcome back. My name is Saurabh Mutha and we're doing a really lovely revision of IDT. Actually, it's not a revision, it's an IDT amendment session. All the notifications that the government has introduced after your book was written, no matter which book you're looking at, but if you're a CA Inter student giving a December 21 exam, then don't worry, study whichever book you're studying from. And once you're finished with your studies or once you're at least done with one reading, then have a look at these amendments. These amendments will make a lot of sense if they're done together at one place. Also, they will be very scoring for you because sometimes ICI, when they're in a really good mood, they take a lot of amendments and they ask questions based on those amendments. So focusing on that, it's a brand new day with a brand new lecture to get you brand new marks in your exams. We're having this IDT amendment. It's amendments, actually the notifications, but we like to call them amendments, so it's easy to refer to them. And these amendments are spread out across different chapters. Let's have a look. Watch it till the end. I'll give you lots of shortcuts for remembering these amendments as well. What are we doing? We're looking at CA Inter, of course, the December 2020 exam. Really excited for it. And looking at IDT notifications. So all the notifications up to 30th April. And the best part, guys, we're looking at the module document. Whatever ICI has come up with the document, we're going to look at that. So first, I'm going to explain it to you on the screen. And then once we're done with that, this is for December 21 exam. And once we're done with the modification discussion, then we will also have a look at the module. A lot of people like to study from what the institute has given. So we'll do just that. And I've also highlighted the module parts. So when you look at it, you don't end up wasting a lot of time reading the entire thing. So here we go, guys. CA Inter, guys. This one is for you. IDT, taxation, IDT notifications for December 21 exam. The first one is a chapter called ITC. Guys, this chapter is a really nice chapter and a lot of importance is given to this chapter. Let's see what's happening here, what change happened here. This is the electric bike company. It's my example. If you've been my student, you know my entire GST runs on electric bike companies. These are GST notifications. This electric bike company is basically making electric bikes. I love them and I dedicated my entire GST CA Inter to electric bike companies. They are buying batteries, they are buying tires, they are buying engines, and when they are buying, they are paying GST on that. And of course, they are registered, so they want to take credit of the GST that they're paid. They're using it for business, they're registered. So as per section 16.1, they're eligible to take ITC. But as per section 16.2, they need to meet 4 conditions to take the ITC. The 4 conditions are D, R, G, R. D, they should have some document or some invoice, etc., which the supplier should have uploaded in the respective GSTR 1. If the supplier forgets to upload it, let's say he has a bad CA or let's say the accountant forgets to upload an invoice relating to your amount, that let's say you pay GST of 2 lakh and he's forgotten to upload the invoices, then you cannot take the ITC. You should have received the goods, the government should have got the money, and you should have filed a return. These are the other 3 conditions, but my amendment, my notifications around this. So let's look at this. Earlier, till earlier, before this notification, they were saying that in case some of the suppliers, let's say you have 3 suppliers here, in case some of the suppliers do not upload the invoices, then based on the number of invoices or based on the amount of invoices that have been uploaded, you will get 10% of the uploaded invoices GST. You will get credit. Even if they've not been uploaded, you will get. So overall, cumulate all the invoices that have been uploaded, see the GST involved in those invoices, and 10% of that you will get. Of course, subject to the maximum. If you need only 3-4%, you'll get those 3-4%. But if you need 10 or more, then you will at least get 10% of the uploaded. So let's say they have uploaded worth GST worth 7 lakh, then you will get 70,000 rupees extra to replace those or in place of those which invoices have not been uploaded. Now, this number used to be actually 20%, which was great for us because people forget uploading invoices. We don't have to suffer so much because we get at least 20% of the uploaded invoices GST we get. Then this was reduced to 10%. And now, guys, as per this notification, this is rule 36.4. This rule we're talking about is rule 36.4. They've reduced it to a very disappointing 5%. So if now invoices worth 7 lakhs are uploaded with GST worth 7 lakhs, you will get only 5%, that is 35,000 GST credit you will get of those invoices that are uploaded. So that is the first change, that is in ITC. That's the first change in ITC. The second change in ITC chapter, guys, I'm just removing this so that we can discuss the second change. I'll just diagrammatically show every change. Now, you know, there's a movie called Andaz Apna Apna, and there's this crime master Gogo, and he says, if मैं कुछ तो लेके जाऊंगा, same way even GST department says हम कुछ तो लेके जाएंगे, and let's see what is happening here. Why do they say that? This is the electric bike company, and congratulate them. This month they've sold bikes worth 60 lakh rupees. So their outward supply is 60 lakh rupees. On that, around 18% of 60 lakhs. So 60 lakh into 18%. So 10 lakh 80,000 is the GST liability. So they need to pay 10 lakh 80,000 to the government. But of course, they have a lot of credit. Their input tax credit is a lot. So they have credit worth 12 lakh rupees. So they say, we have enough credit to pay my 10 lakh 80,000 rupees. But the government says, listen, you cannot, till now you could have discharged the entire 10 lakh 80 through credits. But because now they put this rule, this section or this rule is rule 86B. Guys, this is rule 86B. And this is a slightly different rule because it is actually not really good for us. We would have earlier paid the entire 99% through credit, 100% through credit, but now they say that only 99% of this amount can be paid through credit. So out of 10 lakh 80,000, only 99% of that is out of 10 lakh 80, only 10 lakh 69,200 can be paid through credit. So not the entire amount, 99% can be paid through credit. So what about the 1%? Are you not going to pay? Of course you have to pay, but you have to pay in cash. The government wants cash collections. They say kuch to dena padega aapko if you are someone who sells more than 60 lakh in a month. And you know GST formalities are on monthly. So if in a month you made sales of more than 50 lakh, then beware. You can use 99% credit, but 1% you have to use of what? Of your liability is 1% you have to pay in cash. So 99% of your tax liability you can pay using credit, but that 1% you have to pay cash. Cash means you'll have to put money in your cash ledger and you have to pay the balance in the cash. Now guys, this is honestly not a very great rule, because if I have credit, if it's like ordering your favorite pizza and the pizza is for 1,000 rupees, you have to pay 990 rupees through Paytm, but 10 rupees you have to pay him cash on delivery, because they want cash, and hence that's how they made the rule. Honestly, this rule is slightly cumbersome, but 4 people don't have to pay this, and I'm going to give you the shortcut for that. Tax refund in cash by the government. This is a shortcut to remember who is not subject to this rule 86B. There are 4 people. 1, tax. Whoever has paid income tax. Yes, you're right, guys. In GST, we're also seeing income tax now. If you paid income tax greater than 1 lakh, if you paid income tax greater than 1 lakh in any of the last 2 years, that means you're habitually paying to the government a good amount of money. So then you're exempted from this rule. Next, if you'll see in CA final that how you get a refund of GST, sometimes when you export, etc., or when you have inverted duty structure, which you will see at CA final, both these things, but you get refund of GST. So if you get refund of more than 1 lakh rupees in the last financial year, if you've got refund of more than 1 lakh rupees GST, then we understand that you don't have to pay cash, because anyways money is coming back to you. So why do you want to pay? So for those people who get GST refund, not income tax, GST refund of more than 1 lakh in the last financial year, this does not apply. Also, if let's say this is the month of September right now, and till September, from April, May, June, July, August, if overall cumulatively till this year, till this month, overall cumulatively, you have already paid cash greater than 1%. That means you're habitually paying till this month you paid. So this month this will not apply to you. And of course, how can you tell the government to pay cash? They will obviously use the credit if they have to. So the government, including local authority, including statutory bodies, including public sector undertakings, these will not be subject to this rule. So there are 4 people who are not subject to this rule. How do you by heart it? Tax refund in cash by government. How does the government give you refund? Tax. So tax refund in cash by the government. These 2 things are changing in ITC chapter. Let's quickly have a look at what the module is also saying. I'm just uploading the module as well. Module basically means what the ICI has said in this relation. Let's look at the ICI document also. So we are at par. So whenever you want to revise the amendments, all you need to watch is this video and you are at par with all the amendments. Here it is, guys. Here it is. I'm just sharing the screen. Perfect. This is for the sake of brevity. Amendments made up to 30th April are applicable for you guys. All right, these are notification numbers. If you can by heart them, great. But otherwise, I don't push, guys. Then input tax credit. Yes, this is the first one where they're talking about how ITC under Rule 36(4) has now been reduced. See, guys, so much to read, but what ultimately it means is it's been reduced from 10% to 5%. This is the main point. In case you are interested in reading this document, you can read this document, but only the highlighted portion you should generally read. And then they said there's a rule called Rule 86B where they have restricted, it's your credit, it's your Paytm money, but they have restricted the use of your credit. So they have put this rule which restricts the amount available in the electronic credit ledger, which they say that if your supply is more than 50 lakh in a month, taxable supply, of course, then you cannot pay it. 99% you can pay, but 1% you have to pay in cash. Let's see example, guys. Raman and Sons, for the month of February, they have 100 lakh worth of supply, more than 50 lakh. It's 18% GST, so they have to pay 18 lakh rupees. But 18 lakh, out of that 99%, like 17 lakh 82 they can use on credit, but the remaining 18,000 mandatorily has to be paid in cash. These are two things: tax refunded in cash by government. This is a shortcut. I've also put the shortcut here, so it's easy for you to remember even if you're reading this book. Done, guys. We're done with 4 pages, and now let's look at the next amendment or the next notification. Moving on to the next one, everyone will take on a new page. This one is on a chapter called registration. If you've seen my videos or if you've been my student, you know registration is such a big chapter, but we do it so well. So through section 22, through PIGS shortcut, through year shortcut, through TONAI shortcut, there are so many shortcuts spread across, so you never have to buy hard things. In registration chapter, registration chapter goes on from section 22 to section 30 actually. In that, there is a section called section 25, which tells you, if you've been my student, you'll recollect it. But otherwise, guys, when you want to register, earlier there was a hotline number called 377. What am I talking about? This hotline number, my students know well that when you apply for registration, the assessing officer had 3 days to either accept your registration or to send you a letter saying that these details are required. Then next, you had 7 days to reply to that, and once you replied, he has 7 days to either accept it or reject it. So this was a number to be called upon. Its only change that has happened now is 377 number is out of order. They haven't paid the bill, so now the number is 777. This is the number you need to call for GST registration. So now when you apply for GST registration, you got to wait for 7 days. Within 7 days, they will act upon it. They will either send you a notification. Of course, 7 working days, they will send you a notification, or they will a notice saying that these details are required, or they will give you approval. If they don't, then automatically it's deemed approved after 7 days. After that, you reply within 7 days same, and after that they will decide within 7 same. So the now is 777. That's the first notification. I'm just writing 777. Next, guys, now everywhere you need Aadhaar, everywhere, including your vaccination, you needed Aadhaar. So here also in GST, you need Aadhaar. Basically, whenever you register along with your PAN number, you also need to give Aadhaar details. If you don't give Aadhaar details, then the assessing officer, the GST officer may visit your premises to verify who you are, etc. And for that, this 777 rule does not apply. In that case, they would get an extension, and they could, after you register, they have to do the checking, etc. So they used to get 60 days earlier, which now has been reduced to 30 days. So if you've applied and you've not if you're not linked your Aadhaar, which you should ideally, because it's so much faster if you link your Aadhaar, but if you've not done that and the exam asks you, you can't tell the exam you should have done it. So you will always say that this now period is reduced to 30 days. Also earlier, who could not have gotten an Aadhaar? Some people have been made exemption from Aadhaar. They don't need to give the Aadhaar. Earlier, it was a very complicated person list. Now it's pretty simple. It's the non-resident don't need Aadhaar, guys. How do you expect a non-resident to have an Aadhaar? So if it doesn't have, doesn't matter. Then UIN, remember embassies, consulates, etc. 11 of them in the country. Why 11? Because GSTR 11 they have to file. So these embassies, consulates, etc. These UIN people don't need Aadhaar. Also the government bodies, the local authorities, the statutory corporations, statutory bodies, or any public sector undertakings, they also don't need Aadhaar. So for them, Aadhaar details are not required, not required. That's the second change. Any other change? Yes, very big change, guys. So these are three changes. 777 Aadhaar, if you don't verify, then 30 days. This is without Aadhaar, you have 30 days. And no Aadhaar for these people. Perfect. Just 1 second. All right, so the next one, guys, is very, very important. You know, section 29. Guys, section 29 is slightly dangerous, not from a study perspective, we have a shortcut for that, but it's dangerous from a registered person perspective, because in section 29, in 29.1, you have applied for cancellation. That is okay. You're shutting down your business or you're selling your business, so you applied for closure or a cancellation of a registration. But in 29.2, the officer can also cancel your registration if he feels that you can immediately commence 36 frauds. What am I talking about, guys? If you've been my student, you know what I'm talking. This is a shortcut. So there were 6 reasons: 1, 2, 3, 4, 5, 6. There were 6 reasons earlier when he could cancel your registration. Of course, the procedure is he will not surprise you with cancellation. He will send you a notice that why shouldn't your registration be cancelled, and you'll reply. And during the pendency of that, your registration will be suspended. Now, this has been extended a little, and there are 3 more reasons when he can cancel your registration. What are these 3 reasons? Again, there is a shortcut always. If you missed 99 ITC. If you've missed 99 ITC, then this could be a reason your registration is cancelled. What is missed? First is there is a mismatch. Every time your GSTR1 and your GSTR3B, there's a mismatch. So that could be a reason for cancellation, because you're manipulating. The months you want to pay tax, you will show a lot of GSTR1. The month you don't want to pay tax, you will show less GSTR1. So you're mismatching it. That's manipulation. You don't follow the 99% rule given in rule 86B, which we just saw in the last slide. If you don't follow this rule, then there's a reason for mismatch, for cancellation. And last, if you avail ITC without the conditions given in section 16. If you don't follow those conditions and you still take ITC, then they have a reason to cancel it. So the reasons you already know, I'm just adding 3 more reasons. Missed 99 ITC. So mismatch in your GSTR1 and GSTR3B habitually. Then 99%, that is rule 86B if you don't follow. And ITC, if you're availing ITC without following the condition laid down in section 16, they get angry and they may cancel your registration, the GST officer. All right. Now, I just want to add one more thing here. They have added a surprise element here. Earlier, what they would do is, before they would cancel or suspend your registration, they would send you a notice saying that, listen, we're going to suspend your registration, etc. And during the suspension, you cannot make supplies, etc. Earlier, when they would do this notice, people would get very aware that, listen, my notice, my registration, they're going to suspend. So people would do a lot of manipulations. Now they have the right that they can suspend your license, not cancel it, but during the proceeding of cancellation, they can suspend your registration without giving you a notice. So surprise, what I mean by surprise is that suspension does not require any notice now. Suspension does not. They may give you a notice, but it's not required. So they can do away with that as well. That is cancellation of registration. Let's get back, guys, to the module. Let's see what the module speaks about this. Let's see what the module speaks about this. So this is registration. This first speak about the people who are not supposed to have Aadhaar, not a citizen. Sorry, I wrote non-resident, non-citizen of India. Unique identity number, those people can't. And the government, local authority, statutory body, public sector undertaking, these people can't, don't need an Aadhaar notification. Then revised time limits, I've given the shortcut here. It's 777. Guys, if you read this, it's so confusing. It's almost like you need some other language to understand this written thing. So hence it's good that you have this video. Watch this video and watch it again if you want to revise these amendments. The language is so complicated anyway. So the Aadhaar notification period has been reduced from 60 days to now 30 days. And the number is now 777 because you get 7 days, they get 7 days again. Sorry, they get 7 days, you get 7 days, and again they get 7 days. Perfect. All this is just the same 777 period. This is again the same thing, that if you've given Aadhaar notification, if you've not given Aadhaar, then within 30 days they need to register, otherwise deemed registration will happen. If you applied and within 7 days, working days, they don't action out, then automatic approval. And once you've replied to a notice, again they get 7 days to reply, to confirm or to just cancel registration. If nothing, it's deemed. So this table is basically about deemed registration. 777 also covers deemed registration, and 30 days also covers deemed registration. Here is violation of conditions, where GST registration is liable for cancellation. I've added 3 more points. Missed 99 ITC. If you do that, if you miss 99 ITC, that could be a reason for cancellation. And now guys, the suspend, it can be suspended without affording the said person a reasonable opportunity of being heard. So you could just wake up one morning, get a letter, and surprise, your GST registration is suspended. This is because a lot of people were doing a lot of frauds, and that's how it was. All right. Just checking the audio is okay. Perfect. I'm having some issues with my mic, so I was just trying to see if that is okay. Perfect. Going to the next chapter, but obviously we'll discuss it first, and then we will move ahead to the next chapter. The next chapter is invoice. Very, very good amendments here. Let's see what is happening here on the invoice bit. Guys, there's something called E-invoicing. That's the first amendment, E-invoicing. What is so E about this E-invoicing? The government said that, listen, these physical bills, etc., good, but you should have e-invoices. What is e-invoices? Let me just recap. E-invoice is a normal invoice. You'll generate a normal invoice. There is nothing special about this. But then you will go onto the website and you will have, there's an invoice registration portal. You will go onto that invoice registration portal. You will follow the details and you will put all the details of your invoice, and they will generate an invoice registration number. IRP is the portal, IRN is a number, and that number will generate the invoice with a QR code, etc. And that will be now used, and that's called e-invoicing. Earlier, it was compulsory for people. Earlier, guys, it was compulsory for people above 500 crore turnover. Which year? Any year since GST was introduced. That is 17, 18 was introduced. After that, any year if you have 500 crores plus turnover, then this was subject to, you were subject to e-invoicing. But then they reduced this amount to 100 crores. So if in any year, if from 2017-18, so that means more people will now be required for e-invoicing. And now they've reduced it from the 1st of Jan, they've reduced it to 50 crores. That means from 17-18, if in any year you had turnover of more than 50 crore rupees, then in that case, PAN turnover means one PAN, one turnover case, then in that case, you'll have to issue e-invoices. That means generate an invoice, go to IRP, generate an IRN, and that is how you'll have to do e-invoicing. But thankfully, some people are out of this. As always, guys, movie theaters, you know the exception list: movie theaters, goods transport, passenger transport, banking and insurance, OIDAR and SEC developers, these guys are out of it. Thankfully, why? Because guys, in these cases, there are so many invoices. Every time you go for a movie, there are hundreds of people sitting in the theater. So generating e-invoices for all of them is a very big task. And hence, these guys have been made an exemption to invoice. That's the first amendment in the invoice chapter. Let's see the next one. The next one is gold, guys. That amendment is so important. It could be a question in your exam. Guys, e-way bill. In this chapter called invoice, debit notes, credit notes, and e-way bill, we saw e-way bill. And you know there's a validity of an e-way bill. But of course, e-way bill, you know, guys, whenever you're sending goods from one place to the other and the consignment value is more than 50,000, or they're handicraft goods, or they are going for any job work basis, then you need an e-way bill. Now that e-way bill, guys, the amendment is on the validity. Earlier, the validity was basically 1 day for every 100 kilometers. And it was also 1 day for every 20 kilometers. This slower one is basically when you have over-dimensional cargo, that means big cargo, or if one of the transport modes is through by sea. So hence they had this. So there was no change on this. But now this other, let's say you're transporting some electric bikes and you're transporting them in a truck. Earlier it was 1 day for 100 kilometers. So let's say the example I'm using is 500 kilometers. That's the same they've used in the module also. Earlier you would get 5 days for 500 kilometers. Now they've changed it to 200 kilometers per day. So now you're only going to get 3 days. This, guys, is a prediction. This will come in the exam. This can be predicted. So because it's so important, this change, it impacts everyone honestly, and hence this could be there in the book, in the exam. Perfect. Also, just one thing, earlier, guys, e-way bill, see, if someone tells you you cannot generate an e-way bill, if someone tells you that, listen, I'll stop you from generating e-way bill, your business comes to a standstill, because how will you transport goods? So e-way bill generation is a very good thing, and you should have the right. Anyone blocks your right, that's not good. Earlier, they used to say that if you've not filed your returns for 2 months or 2 periods, if you've not filed your returns for 2 months, and for people who file it quarterly for 2 periods, if you've not filed it, then we will block your e-way bill capacity to generate e-way bill. Now they've also included one more thing, that if your license, if your registration, I keep referring to license, if your registration is suspended, you remember whenever they want to cancel it, first they will suspend it during the course of inquiry. If your registration is suspended, then you cannot generate e-way bill. So no e-way bill can be generated if you have not filed your returns for 2 months or 2 periods, or if your registration is suspended. Of course, once it's cancelled, you anyways cannot generate e-way bill, but during suspension also you cannot. That's a new thing here. That's a new thing here. Next, so invoice chapter has a couple of them. So let's see the next one. The next one, guys, every time now we go shopping, every time now you've gone and bought a thumbs up, or every time you've now gone to pay someone, they have a QR code. Nowadays I see even the street vendors, people who sell dosas and a chart on the street, even they have a QR code. You scan the QR code, you put the amount and you pay that person. We're talking about a similar QR code, but we're talking about dynamic QR code and the requirements. What is a dynamic QR code? Let's understand the difference between who is a dynamic and who is a normal QR code. A normal QR code you scan and you put the money amount. Let's say you've eaten a dosa and it's for 100 rupees. So you will scan it and you will put 100 and then you will pay. But a dynamic QR code is basically a code where you scan and the amount automatically comes. So the amount automatically comes on that QR code. So scan it, the amount automatically comes and you got to pay that amount. So basically it's dynamic. That means it tells you the amount also that you have to pay. You cannot change that amount. That's a dynamic QR code. So that's the difference between a normal QR code and a dynamic guy. He has one more feature that he tells you the amount also to pay. Now dynamic QR code has to be put on your invoice. But for whom? If you have turnover of more than 500 crores in any year since 17-18, if you have turnover of more than, that means very few people. If you have turnover of more than 500 crores in a year from the year 17-18 in any of the years, then QR code is supposed to be a responsibility. You have to include QR code in the invoice. But there are some times when you don't have to. First, if that person who is paying has decided to pay using any other modes, or he has decided to use prepaid, in these kind of circumstances, even if you have the QR code or you don't have the QR code, it's okay. So there are some concessions given in the QR code. So that is the QR code. Again, goods transport, passenger transport, movie theaters, banking and insurance, YDR don't need QR code. All right, perfect. Next, very important, guys, debit notes. Nothing about debit notes. You know what are debit notes, you know what are credit notes. If let's say you're supplying electric bike, but instead of 1 lakh rupees in the price, you missed out 10 and you put 10,000 rupees. So if the quantity, tax rate or the value is low and you want to increase it, then you will issue a debit note. Same way, if the quantity, tax, value is high and you want to reduce it, or a customer is sending the goods back because he didn't like it, you will issue a credit note. So we're talking about these debit notes and credit notes now. You know when they are issued. Now I'll tell you something about their expiry. Earlier, a debit note, credit note, actually they are linked to an invoice. They are linked to an invoice. You send an invoice, but you did something wrong in the invoice, and hence you issue a debit note or credit note. You send an invoice, but there's something more that you added in that invoice, so you send a debit note, credit note. So they're linked to an invoice. And earlier the expiry was also linked, but now they've delinked the expiry. So these will have their independent own expiry. They will have their independently own expiry. And you know what is expiry, guys? Section 16 subsection 4 tells you that expiry of an invoice is if any invoice is issued during the year gets over. After that, the September return due date, that is 20th October, or the annual return filing date, whichever is earlier, is the expiry. Now debit notes will have their own expiry. Example, if during 2021 the invoice is issued, but the next year the debit note is issued, so debit note will have its own expiry. Thank God for that. That was creating a lot of issues, and thank God for that. Perfect. Guys, let's check the invoice, debit notes, credit notes, and e-way bill from here. E-invoicing mandatory for all registered businesses with aggregate turnover in any preceding year more than 50 crores. Guys, this was earlier 500 crores. Then they reduced it to 100 crores, and now they've reduced it to 50 crores from the 1st of April 2021. From 500 crores, earlier there were fewer people who had this requirement. Now more people have to fulfill this requirement. Then, guys, the validity period of e-way bill has been reduced. This is so confusing when you look at it, but it's the simple changes here which I've highlighted. One up to 200 kilometers per day. And they've given us some also which I've just discussed. If it's 500 kilometers, then earlier it used to be 5 days. Now it is only 3 days. Because 200 kilometers per day. So if it's 200 first day, second day 200, and 100 last day. Next, e-way bill you cannot generate. Earlier it was only when you've not paid 2 months or 2 periods. And now it is, even if your license has been suspended, even then you cannot generate an e-way bill. And dynamic QR code. First of all, I told you what is dynamic QR code. So if your turnover in any year has been more than 500 crores, then you're mandatorily required to have a dynamic QR code from the 1st of December 2020. You don't have to remember honestly all these minute dates from when, but generally if it's asked in the question, they're going to test you on the new thing only. Next, non-applicability of dynamic QR code. Guys, these people are not subject to dynamic QR code. They're also not subject to e-invoicing, because guys, so many people go to a movie theater, so many people sit in a bus. How are you going to do e-invoicing or QR code for so many people? Exports also no dynamic QR code, but exports are seen generally at CA final, so I've refrained from talking about that. But guys, in certain cases, like he opts to make a payment without using the QR code. If the customer says I don't need the QR code, or if he opts to make the payment to other modes, or if he opts to make cash payment, or if he opts to make prepaid payments, then in those cases you don't need the QR code. All right. And guys, remember, if Amazon is selling something, they will use the QR code. But if you're a seller on Amazon, then you also independently have to put a QR code. So QR code is for each person, for each supplier registered person independently. That's about it. We're talking about the returns, and we're talking about one of the major amendments here. We're talking about returns, guys. Everyone, eyes on the screen. We're talking about returns. There's something that is absolutely important. It's very simple, guys. If you understand it, it's really simple. Let's understand what is happening in return. But guys, we cannot understand the solution unless you know the problem. So let's see the problem. This is electric bike company. And as you know, they buy batteries. They buy really long lasting batteries. So they have bought batteries on which they paid GST of 2 lakh rupees, which they want to claim as ITC because they are registered and they're using it for business and all that. Now the supplier is here, but the supplier called him up and said, listen, I have sold it to you in July. In the month of July, I have sold this to you batteries, but I am taking a quarterly return program. I have opted for quarterly return. That means my GSTR1 for July, August, September. April, May, June is the first quarter, that is over. For July, August, September, I'm going to file my GSTR1 in October. Why October? Because earlier, guys, everyone had to follow monthly, but now for certain people, they have said a quarterly. We'll discuss all of that when I get the details. But right now, I'm just telling you that that guy called you up and said that, listen, I'm filing my GSTR1 in October. And you said, are you crazy? It's July. July, August, September, 3 months, my 2 lakh rupees will be blocked. I cannot use this credit for 3 months. I don't like this. I'm going to go to some other supplier. I'm going to buy from some other supplier. So that was not right. So the government says, listen, we'll create a mechanism. You file your return quarterly. You file your return quarterly. But for these kind of people who are irritating you, you pay the amount monthly. So we will make a small return where you can furnish the invoices. So we'll have a facility for you for invoice furnishing. But which kind of invoices? Only this B2B returns. Only this guy who's troubling you, only the electric bike, things like electric bike company, people like electric bike company who are registered, who want to take credit, only for these B2B supplies, you can furnish the invoices in an invoice furnishing facility and do that every month. So for July, do it in August. But should I upload all my invoices there? No, upload only those invoices which are B2B. Upload those invoices. Whatever is the 2 lakh payment, you make the payment and get done with it. What about other batteries? Let's say you supplied other batteries to individuals also. To some college students, you supplied batteries. They don't care because they are B2C. They're anyways never going to take credit. So for them, you can put the amount in GSTR1 when you file in October. So you got really happy. Electric bike company is happy because now based on this invoice furnishing facility, they can now get ITC of this 2 lakhs. So they are happy. You are happy because you don't need to input like hundreds of invoices. Only the B2B invoices you input, only that you make the payment and get done with it. Guys, this is called the quarterly return monthly payment. What is the best part about this? The best part is only 4 GSTR1s. Earlier, we had to file 12 GSTR1 every month after every month. Now only 4. Also, only 4 GSTR3Bs. So yes, guys, both the returns are now only quarterly for some people who opt for this. So that's a great thing. That's a super great thing. This is the first good thing about quarterly return, that you're finding only 4 returns. Now, the next good thing is that your accounting etc will become easy. But what is a bad thing is that the electric bike company B2B, for B2B, how will they take credit? That was a problem, and for that problem they have created something called invoice furnishing facility. So they have created an invoice furnishing facility whereby they say that, listen, you're filing your return quarterly, but this you can do monthly. We'll come to IFF, but first let's see who can do this quarterly return monthly payment. You can do this if your turnover last year is up to 5 crores. So that means you're not really big, you're not even very small, but you're not really big. So a lot of people, guys, up to 5 crore, a lot of people have turnover up to 5 crore. So if your turnover is up to 5 crore, then you can use this facility. So you can use this facility if your turnover last year is up to 5 crore. And obviously that means that if this year you cross 5 crore, you're out of the scheme. Just like competition, you can use it if last year turnover so much, but this year if you cross that turnover, you're out of it. Same way here also, if you're touching that turnover of 5 crore, you're out of it this time. Then guys, what is this IFF? You need to opt in. So let's say now for the month of July, August, September, for the quarter of July, August and September, you want this scheme, quarterly return monthly payment scheme you're opting for. So by when can you opt in? It's very complicated, but I've simplified it for you. They say, just hear me out, guys. Before this quarter, second month, the first day. It's some different language. What did I just say? Before this quarter, so not July, August, September, before this quarter, April, May, June. The second month, the first day from that. How will you remember this? I'll tell you how will you remember this. 211L. This, from this day to this day, you can opt in this scheme. So what is this 211L? First, whichever quarter you want to start this from, you want to start this from July quarter. Okay, this quarterly return monthly payment, you have to opt, as you have to go on the website and opt for this scheme. This is an optional scheme, just like composition scheme. So you go online, but when can you opt it? If you're in July, August, September quarter, then go to the earlier quarter, which is April, May, June. Go to the second month first. Okay, so that is May. And from the 1st of May, you can apply. So again, I repeat, which quarter are you wanting to apply for? July, August, September. So go to the previous quarter, the second month, the first day. So 21. And so basically from 1st of May, anytime you can go and you can ask a CA to go and take this opt in for this QRMP. Until when? In the current quarter, the first month, the last day. For month first, daily. So in July, August, September, the first month is July, the last day of July, that is 31st July. So from 1st May to 31st July, you can opt in any time into the scheme. Once you opt in, then throughout you are in this scheme only unless you opt out or unless you cross 5 crore turnover. Again, I repeat, guys, when can you opt in? Very important. When can you opt in? This thing is 211L. What is 21? In the previous quarter, second month, the first day. 21. Second month, the first day. First month and then day. Until when? In the current quarter, the first month, the last day. So 211L. That is your opt-in, and you will remain in this. You will remain in this till you opt out or till you cross 5 crore. Like same like composition scheme. The moment you cross 1.5 crore or 75 lakhs, as the case may, you're out of the scheme. Same way, the moment you cross 5 crore, from the next month you're out of the scheme. You have to do monthly. So if you're big, you need to do monthly. If you're small, then you can do QRMP. This is IFF. So now let's see. Have you opted for IFF? Yes. This guy will definitely opt for IFF. So we're in the month of July. So you will file your IFF by August 13th. So that is July's IFF by August 13th. So by the next month 13, you have to file the IFF. So IFF has to be filed by the 13th of the next month. So that is July's. What about August IFF? August IFF you'll file by September 13th. Great. And what about September's IFF? September you will not file the IFF because the quarter is ending. So you will file GSTR1. So that means you will only file IFF for month 1 and month 2. Every quarter, the first and the second month you'll file IFF. The third month you'll file GSTR1. So some B2B invoices you'll add here. Some B2B invoices you'll add here, and whatever is remaining, imagine you had supplied batteries to individuals also, right? Those you can put in GSTR1, no problem. Those you can put in GSTR1. So whoever is in a hurry to take ITC, put their details in your IFFs, and whoever is not in a hurry or whoever is never going to take, then those you can put here, those you can put here. I hope you're getting this, guys. So IFF is only for month 1 and month 2. Then what about month 3? Then you have GSTR1. And whatever you put in the IFF, guys, whatever you put in the IFF will automatically get uploaded in the other person's. You know that auto upload will get automatically uploaded in GSTR2A, and for some people it's GSTR2B. It will get uploaded. It means the same, guys. 2A is something you can change, you can confirm. 2B is a static one. So these 2A and 2B, on the basis of that, electric bike company, they can take the credit. They are happy, you're happy, everyone's happy. Again, I repeat, QRPM is a scheme you have to opt in. Yes, you have to opt in for the scheme. You can opt in only if your previous year turnover is up to 5 crore rupees. In this, you will file only quarterly returns. Yes. How will they take the ITC then? You will file invoice furnishing facility by the 13th of next month. For the first month and the second month, you will file IFF. And in IFF, you can only put B2B invoices because those people who want to take credit. But what if I don't want IFF? Then don't put IFF. No problem. What if all my invoices are to customers who will not take credit? Example, I'm selling dosas. No one will take credit of that. Then don't worry. You don't have to pay IFF. You have to just file GSTR1 quarterly. Perfect. So IFF is only an option for those people who have B2B suppliers, recipients who want ITC. And IFF, when can you opt in? This scheme, guys, you can opt in anytime, but IFF you can opt in from 211L. That means the previous quarter, second month, the first day. In our thing, 1st of May, and in this quarter, the first month, the last day, that is 31st July. That's how you can remember opt-in. Otherwise, opt-in is very confusing. So remember 211L. All right. So you opted in. When can you opt out? You can opt out whenever you want. After that, it will be monthly returns. And guys, if your turnover touches 5 crore, then from that month onwards, you are opting out. You are automatically opted out for the scheme. IFF has to be filed by 13th of this next month. So guys, one IFF. Let's take two IFFs. This one IFF you filed on 13th August, in which you have shown supplies of 2 lakh worth of GST. And in the next, you've shown supplies of 1.5 lakh worth of GST. So basically, it's 3.5 lakh worth of GST. But guys, how many invoices can I upload in the IFF? In each IFF, guys, in each IFF, you can upload invoices only up to 50 lakhs. Isn't that small? Yes, but you are a small dealer. Your turnover last year was only 5 crore. So hence in each IFF, so in the July IFF, which I filed on August 13, I can up to 50 lakhs of invoice value, not GST value, invoice value I can have. And again in August also, which I filed on September 13, even that means they are saying that only your B2B suppliers, and that too limited to those who really want to take ITC. If they can wait, don't put it. If they cannot wait, then those put it, because you have a limit of 50 lakhs. 50 lakhs of IFF. In every IFF, the invoice value can be maximum 50 lakh. Great, I filed the IFF. Now I have to pay this 2 lakh also, right? Because I've already collected it from electric bike company. I have to pay it also. Yes. So when do I pay it? Good thing is you pay by the 25th of the next month. So whenever you file the IFF by the next month 25th, so you get a good amount of time to pay. Yes, you get a good amount of time to pay. So if it's July's IFF, you pay by August 25th. If it's August IFF, you pay by September 25th. So you have to file by 13th. So the government should know that this guy has bought goods from you. So you have to file by 25th, but payment has to be done by 25th. File by 13th, sorry. File by 13th and pay by 25th. Let's take an example, guys. July IFF, he's waiting because he's bought the batteries in July. So he's waiting. So you will file it by August 13th. You will file it by August 13th. But this payment you can make by August 25th. Same way, August IFF, you will file by September 13th, but you can make the payment till August, September 25th. So first file and then pay. Don't do it together. First file and then pay by 25th. And whatever balance has to pay, paid, you pay in GSTR1 along with GSTR1. Perfect. That is the IFF system, guys. That is the IFF system. Anything else left? Yes. Just one thing. How do you make this payment? Do you calculate? So they are saying for this payment, they have brought a shortcut. They have given you a really, really nice option. So there are two options. One is self-assessment. Self-assessment is You have sold batteries worth 2 lakhs, so that is your liability. You have inputs worth 1 lakh 20, so that is your credit. So 80,000 you have to pay. This is just 1 second, guys. In self-assessment, you have to apply your mind. How much have I sold to B2B? How much credit I have? And then the balance you pay in cash. This is when you self-assess. But what if you go wrong? What if this calculation goes wrong? Then if you've taken extra credit, etc., then you'll have to pay interest because you did your self-assessment. You are responsible. You have to pay interest on the shortfall. Interest, as you know, guys, is under section 50. It is 18% per annum under section 50. But the government says if you don't want to apply so much mind, I'll give you an option. They said that we will have a fixed sum method, which is very simple, guys. Fixed sum method says that last month, how much did you pay? Pay that much only this month. So if last month, let's say for April, May, June, also you took monthly. So in June, how much did you pay? You paid 80,000. So then in July also you pay 80,000. In August also you pay 80,000. And in September, you see how much you have to finally pay. If it's more, pay more. If it's less, pay less. Take a refund. So this fixed sum basically says whatever you paid in the last month, continue paying that. And then in September, whatever you pay, then October, November, December, October and November will be the same as September. So they just say that pay whatever is last time. Guys, in this, you don't have an option to put the amount also. The fixed sum basically means the sum will be fixed by them. You have to just pay it. So again, I repeat, if the month of June you have paid monthly and in that you have paid 80,000, then in July you pay 80, August you pay 80, so you paid 1,60,000. But what if you have to pay more than 1,60,000? Then no problem, no interest in this case. Why no interest? Because the government has made a rule. You can't even change the amount. So they will not have any interest. That's a good thing here. But just one more thing. If last month you have not paid monthly, if for you paid April, May, June, you have paid 3 lakh rupees because it's for 3 months, not for 1 month, then they cannot say pay 3 lakh now because you're comparing a quarter with a month. So let's say April, May, June, you were not in the quarterly payment. You paid quarterly. April, May, June, 3 times together you paid 3 lakh. Then and now you're opting for monthly. Then for IFF, then you will pay 35% of that amount. So 3 lakh into 35%. I'll just summarize this 1,05,000. I'll just summarize this on a new page so that there is more clarity. Guys, let's say in the month of June, you have paid monthly. Okay, how much did you pay monthly? 80,000 rupees. Okay, great. So in July IFF, you pay 80,000. What about August IFF? You pay 80,000. Guys, this is as per fixed sum method. They fix it to 100% of what you paid before that. And in September, you do your calculation. If you have to pay more, pay more. If you paid less, don't worry, there will be no interest in this case because we are telling you how much to pay. You have not decided this. This is when the last month was monthly. But what if last quarter was I paid quarterly, April, May, June together, and I have paid GST of 3 lakh rupees? Then how can I expect you to pay in July 3 lakh again? How can I compare 3 months with 1 month? So you pay 35% of this, that is 1,05,000. Again in August also you pay 35%, that is 1,05,000. And in September you do calculations. And if it's less paid, but will not charge you any interest. So in both these fixed sum, you will not be charged any interest. So in fixed sum, no interest, that's a good thing. In self-assessment, you can assess, etc. You might be paying lower than 100% or 35%, but if your calculation are wrong, there will be interest. Guys, that's about it. And GSTR 3B and GSTR 1. Okay, now just the last due dates, guys. IFF, I told you, has to be filed by the 13th of the next month. So July's IFF by August 13th, August IFF by September 13th, and GSTR 1 also after that has to be filed by 13th. So 13 suddenly becomes a lucky day for you if you're filing monthly. But if you're filing quarterly, this is if you're filing quarterly. But if you're filing monthly, then GSTR 1 has the due date of 11th. So if you're filing quarterly return monthly payment, then the date is 13, 13, 13. And if you're filing monthly, that means you're above 5 crore or you're a very big person or a very big turnover, then 11th is the due date for GSTR. Perfect. Guys, that is it. Let's have a look from the book around this. This is returns chapter. Quarterly return, monthly payment, quarterly return, and you pay monthly. From 1st of Jan, that was Happy New Year for a lot of people because of this. This is an optional return filing scheme, so it's not compulsory and PAN based. Guys, one more thing I forgot to tell you: the turnover is PAN based. That means last year your turnover should be 5 crore. But guys, let's say I have an electric bike company in Maharashtra and an electric bike company in Gujarat, then I can choose. So the first time they've said this, that I can choose QRPM for, you can choose this method for one of the GSTNs. That means if Maharashtra I want to do this, in Gujarat I want to do monthly, can I do that? Yes, you can. So good thing is turnover has to be seen PAN wise, but this option of quarterly return, monthly payment can be done state wise. That could be a good MCQ. Maharashtra I can do separate. So Maharashtra I can do quarterly return, monthly payment, and Gujarat, let's say I sell too many bikes, I want to do monthly, I can do monthly there. All right. GSTR 1 and GSTR 3B on a quarterly basis. So good thing is that you reduce the number of, and this can be done GSTN wise. That means in one state, it implies that some GSTNs for a PAN can opt for QRPM and the remaining cannot opt for the set scheme. All right. Conditions, guys: who is not eligible, who have, and also guys, if you want to take this scheme, if you want to take this advantage of the government, make sure you, before that you filed your return. So if you're taking this scheme today, guys, let's say today is the 9th of September, if you want to take this scheme, make sure the August return has been filed. No, sorry, August return, the due date has not come yet. Make sure the July return has been filed. Or let's say, I'll give you another date. Let's say you're filing on the 27th of September. You want to take this option. Make sure the August return is filed, because that due date had just gone. So whatever latest due date has gone, make sure you've done that filing. Manner of exercising: by when can you exercise? The first day of the second month, the first month of the quarter, last day. The shortcut is 211L, guys. Don't confuse yourself. So go to the previous quarter, second month, and the first day. First month, and then day, and then again month, and then day. So from May 1st to July 31st, you can opt in any time. That's what is given here also, 1st May to July 31st. I've used the same example which is given here. Just simplified it for you guys. All right. And if your turnover crosses 5 crore rupees during the quarter, then you're out of the scheme. All right. You still have to furnish GSTR 1, but only for the end of the quarter. All right. And for the first month and the second month, M1 and M2, you have an IFF facility. It's not compulsory, but if you want, you can file IFF. If there are people who are waiting for the credit, you can file IFF. The IFF is not mandatory, but an optional facility. You can upload IFFF up to 50 lakh in each of the first 2 months. All right. And by the 13th day, you have to file the IFF. By the 13th day, you'll have to file the IFF. All right. So let's say 2 invoices you want to declare out of 10 invoices, then those 2 invoices can go in the IFF. All right. And GSTR 1, the same rules apply, so there is no problem. And whatever you upload in the IFF and also in GSTR 1 gets uploaded in form auto-populated in form GSTR 2A, 2B, so that electric bike company can then take the credit. All right, these are some examples. You can go through them. There's not too much of details there. GSTR 1 and GSTR 3B have to now file quarterly. GSTR 3B will now be filed between 22nd and 24th of the month. Guys, earlier this date was 20th. Now they made it 22nd to 24th, depending upon which state you are in. Guys, most of the states are still in 22nd. For some smaller states, they made it 24th. All right. And monthly payment, yes, guys. Till now we've seen the filing, that return has to be filed quarterly, IFF has to be filed monthly, but who's making the payment and when are you making the payment? Guys, you can make them by the 25th day of the month succeeding such month. So if you're making the IFF for July, you can pay by August 25th, you can pay. You have 2 methods, self-assessment and fixed sum. The fixed sum method says that if you filed your return quarterly before this, then 35% of that which you've paid in cash. And okay, yes, 35 of the percent you paid in cash. And if you file your return monthly, then 100%, the exact same amount that you paid in cash last month, now again you have to pay. Again, I showed you an example was cash only. The liability minus the credit was the cash amount. 100% of that has to be paid if you filed monthly till last time. And if you furnish quarterly till last time, then you have to pay 35%. I'm speaking very fast, so you don't have to do the option of speed listening to it on YouTube. All right. This is an example, guys. If you file your month, if you've tax paid for the quarter, if you paid 100 in the quarter, then you have to now pay 35. But if you file monthly, then what you file is what you have to now also pay. Self-assessment, guys, is easy because you have to assess it yourself, but it'll save you money. But in case there's any problem, you'll have to pay interest. There are 2 examples. Applicability of interest: no interest in case of fixed sum. because the fixed sum, they have told you how much to pay, but there will be interest in case of self-assessment. For self-assessment method, there will be interest under section 50. And guys, for IFF, there is no late fee. IFF is your option. You are helping the electric bike company by filing the IFF. So IFF, there is no late fee. And with that, guys, extension of due dates, we already discussed that for if you're doing the QRMP scheme, then your IFF also by the 13th and by GSTR1 also by the 13th. And if you're filing it monthly, that means you don't want the scheme or you're too big, then by 11th, you have to file GSTR1. That is the end of this document. I'm stopping the share. I'm talking to you guys. Guys, this lecture is important. Watch it once you've done the first reading, so that whatever book, doesn't matter which you book, because a lot of people feel, am I reading from the right book? Is my book updated? Doesn't matter, guys. I have updated it for you through this video. Watch it again whenever you want to revise it. That's been my time. Thank you so much. I'm uploading RTPs and previous year's question papers also for CA Inter students really soon. Watch out for them. Have a great weekend ahead, and Ganpati Bappa Moria.